folks, and welcome to the Pipnotic Symposium on the 10th of June 2024. Okay, so we're just going to download the new data, the COT data, and then we'll have a look at that and see what we can find. While we're waiting for that to download, let's just have a quick look at what's going on here. Just a quick run through the NASDAQ, the Dow Jones, S&P. The S&P is racing higher. Let's just look for something that might be a little bit interesting. I think oil is what we'll start with. Should be done by now. Almost. Still running. So what I've done is I've built this feature into this where we download the data, and I built like a module, like a machine learning module, and so just to explain what it does, when I select the type of contract, the year, and the actual contract itself, let's say, let's go to oil, let's go West Texas physical, right there, and we just click on this button. What happens when I click on this button is a lot happens. But one of the things that happens is that all the data that is available, let me turn off this VPS because it's making a lot of noise. Okay, and so what's going on is the data from the COT database is being downloaded, and then this software goes through, reads all the stuff, extracts all the stuff that's interesting, and then chucks it into something called a data frame. And a data frame it's kind of a matrix of data, and all it is it's just like a two-dimensional array, I suppose you could call it, and each item in the array contains like a list of data. Okay, and so what I do is I take that and I take the whole data frame and I feed it to a machine learning algorithm, and that analyzes it and then tells me in words what exactly it looks like. Okay, so let's West Texas physical. Let's try that. So now, Smart Assistant, smart because it's machine learning. Well, kind of smart. And so what it's doing now is it's analyzing this information based on kind of like a pre-taught neural network that knows a lot about precisely this information. So in order to teach the algorithm, I fed it many years of COT data, and the result is like a pretty clever assistant, hence the word smart assistant, that is able to analyze the data and make sense of it for us. And it didn't work. I think my internet connection is not functioning. Let's have another try. I just jumped off the VPN. Maybe that's what's going on. So what it's doing now, it's trying to make sense of this data frame that I've built based on the graphs that you saw just a second ago in the bottom of the chart. And so once it's done, it's run, then it spits out this information, and it's taking the most recent data and it's comparing it to some of the previous data. So you can see here, long, this is non-commercials, we have about 333,000 long positions. Short, we have 122. Okay, so there's long positions decreased by 11,000, short positions increased by 22,000. Okay, and so this is telling us a little bit about the behavior of the data in the data frame. So long positions decreased. So long positions, they were up and now they decreased a little bit, and short positions increased. So short positions, they're still less than the long positions, but they increased. And so it looks like that we have the longs, we have the shorts and the longs. Here's maybe the zero line. They are starting to move towards each other, which is what we can see here. So this is lending to the notion that we're going to see crude oil begin to sell, because we're seeing the big people, the people who have a lot of insider knowledge about the asset and the markets and the flows and whatnot, and the logistics around physical oil, and they are looking to sell. They're increasing their short holdings. Okay, and then we have the commercial traders, which is the exact opposite. And these guys are just hedging against fluctuating prices of oil. They like stability. Okay, and you can see here that it's kind of telling us something slightly different, where we have more short positions than we have long positions. So this is going to be, these guys are often trading opposite to each other, and they're not very often going to be trading in line with one another. On some other assets, you'll see that sometimes, like Bitcoin at the moment. I mean, no non-commercials and the commercials, they're both beginning to accumulate more long positions, which is it's kind of a pretty good indication that the price of Bitcoin is going to go up. But when you have like physical commodities like crude oil, barrels of crude oil, I mean, there are a lot of other things that you have to take into consideration. So there's risk. So the people who are producing oil are hedging against this risk, which is what you can see here. Okay, so current open interest is 1.8 million, which is just telling us about the liquidity of crude oil. And this is decreased by 19,000. Okay, so the liquidity of the oil market, futures market, has gotten slightly smaller, tiny, just ever so slightly. Okay, and here we're looking now at speculative interest, which is the non-commercials. These are the guys who are speculating, and we can see over the past year, speculative long positions have fluctuated, but generally decreased from the highs around the early months of 2024. Notably, the long positions have significantly decreased since February 24, with ups and downs along the way, which is what we could see in the data in the graph earlier. Short positions in speculative interest have seen a slight increase as well. Okay, so this is telling us again that those short positions are on the uptick for the speculators. Okay, then we have this future predictions, and this is just based on all of this. If I would have clicked on this button here and rather check this box and click that, it gives us 4, 5, 6, 7 years of COT data for physical oil, and I feed this information into the machine learning algo, and it spits out predictions. It tries to make predictions. And so you can see speculative interest, a continued decrease in speculative long positions might persist due to market uncertainty or declining bullish sentiment. So this is, I mean, what this is telling us is that the people who trade oil to earn a profit, they are selling. Okay, they are increasing their selling interest in contrast to their buying interest. Okay, so they're decrease in speculative long positions. So when you are decreasing your longs, this could mean that you're getting profits on your long positions, number one, or you are beginning. Let's just draw it. We like cycles so much. So prices are going up. They're decreasing their long positions, and this could be the end of a cycle. We'll have a look in a second. Okay, so we could have finished this bull cycle on whatever time frame is that we're looking at. Because they're decreasing their long positions, they could be taking profit. Okay, and so now they are likely looking to engage in selling crude oil based on what we can see in this information, and this is what this algo is telling us. Yes, so that's what we have. If we go here and we look at all the data since 2017, I think I have. That's a lot of data, so it's going to take a couple of seconds. Yeah, you can see. We don't have a whole lot of data, do we? It's only since 2022. Yeah, I don't have a lot of price data for oil. But we have 2 years, about just over 2 years, and you can see that we were going really far down. We went up. This is net short, and then we had like a significant increase. We went from 1.9 to minus 1.9 to minus 2.3. So that's a pretty big jump. If we go to the commercials and we have a quick look, you can see here that we have the 333,000 contracts that we saw. Okay. And you can see that these are starting to go down a little bit, but the short positions are starting to widen. So we have a contraction on the long side, expansion on the short side for oil. So this is telling us that we are potentially likely going to see the price of oil begin to move down. So if we go to the price chart, I mean, we can see that already. This is the daily chart. Okay, so this is pretty reactive, and we're seeing the price of oil begin to move lower. Okay, and so what we can do with this information is we can position ourselves short at key levels. And I'd say that the trade probably already happened. This is where we had this little zone here, and the reason it's a zone is because prices bounced. Okay, price went through it, and now what zone did it? This one did. Okay, prices came pretty close to it, and this is where we saw prices decline. Let me plug my computer in before we die. I'm really envious of Mac users. They can use their Macs for like half a day. My wife, she has her MacBook Pro, and it's an absolute animal of a computer, and it can run all day on a battery. I simply don't get it. And I have my PC, and I unplugged my PC for 1 hour, and it starts flashing and blinking. It says it needs power. It's a blow. Maybe it's the architecture, the Power PC relative to the Intel chip. I don't know, but they seem to do a pretty good job on Macs. Anyway, back to this. So shorts from around here. I think it would be safe to assume that prices are going to rebalance this price inefficiency. Then I think a deeper attempt. So if we, where are we? If we can sell for a slightly higher price than the highs of this, maybe bring it all the way back to this pattern here at the what does that say? 1014-ish. I think that would be a pretty interesting spot, and that probably line up quite nicely with this downward sloping trend line. But I think that would be a really interesting spot to sell oil from just there. Okay, let's have a look at CAD. So the algo is running pretty fiercely, as you can see. It's really running a lot at the moment. I just had a complete rewrite. Not entirely. I rewrote the majority of the error handling and the input validation for each function and the output of each function and whatnot. And so I'm just running that on a test server now just to see what it's doing, and it's doing some good stuff. So I didn't screw it up, which is quite good. Quite happy I didn't introduce bugs or screw it up, because there's a lot of changes in the code. But essentially what I've done is I've added a lot of error handling, which is good, because then we'll be able to see when things don't go our way. And you'll see that here in the experts tab. Okay, they'll all be shut off here. I just click this on here. Actually, we're not even on the ASR template, so it's not going to run. But what it'll do, it'll run here. You can see it'll run like this. This is the version 1.088, which is coming out probably next week, maybe the end of this week. And here you can see a lot more information about it. We can see we're analyzing the USD Canadian dollar from within the run algorithm function in the actual code itself. And so when you guys say, oh, it's not opening a trade, it's saying error number 123, then you'll see the function name here. You can say, and that error is being thrown, or that exception is being thrown from within the lots optimized function, for example. And so you can tell me that, and I'll say, and I'll know exactly where it is, and then I'll be able to find the solution much quicker. So this is just a way for us to kind of streamline the communication relative to errors and whatnot in the ASR, because I think this is kind of important. Yeah. Okay, so I mean that was oil. This is a Canadian dollar. We can just have a quick look at the Canadian dollar. Let's not look at everything. Let's just go here and say CAD. Oops. It's not going to look for the CAD. Boom. Then let's click on that. You can see here we have net long. Okay, and you can see that in the price chart actually pretty clearly, that boom, we had a pretty keen interest in buying. This is actually the weekly chart. So let's go maybe to the 4 hour, the daily. It's not on the 4 hour. And yeah, you can see that it's a pretty clear indication that the prices are likely going to move higher. But the ASR is telling us we have a really big price inefficiency at supply, so I'm going to sell it. And so this is exactly what it did here earlier today, actually about half an hour ago. And I was expecting prices to wean down. Will they? I don't know. We have a nice wide stop, so we'll just let that play out and see what happens. And there's now on this new version, there's alignment between the time frames that are being traded. So the 1 hour and the 4 hour, if the signal is taken on the 4 hour, and if it's taken, on the 1 hour, and if it's taken on the 4 hour, then there'll have to be alignment on the 4 hour and the daily, which is kind of cool. So this really helps. It really helps a lot when kind of finding the ends of cycles on more than one time frame, which is really actually quite important. Good. So it's saying it's going to go up, and by George, I mean I'd have to say that I agree. Looking at this price chart, I mean you can see that there's a really keen interest in keeping prices premium. We do have some supply just up here, but it's still a pretty fair ways from price. So I'm thinking that prices will probably sit around here and maybe have a slight pullback before we continue up into this area of supply here at 138.55. I have marked up in my chart, which is the sell zone right there for this supply zone just here. So I think that looks pretty cool. Yeah, another thing I want to show, which is kind of cool, is the insiders. So what I've done in the insiders, I've created this thing where I can go and I can, in the same way as I'm doing with the funds, I can select a company and I can click on it. It downloads, I mean, literally a boatload of data, tons of data. As a matter of fact, I'm just going to show you what that data looks like so you can appreciate what's going on behind the scenes when you click a button. Let me dig that out quickly. Okay, so here this is the insider data, and this directory is absolutely huge. If I just scroll down, I don't even know if I can scroll down. It contains so many. As a matter of fact, let's see how many files it contains. Go to properties. Yeah, wow. 17,309 folders, 55,144 files. And each file, let's just grab any random one. Looks like this. Let's grab this one here. And it looks like this. This is like an SEC report that we get from the SEC website. And it contains a lot of super ugly data, luckily, in XML. After this, and then we just kind of sift through this data and extract all the information here, and luckily we're able to make sense of it to the point where we can actually use it to make trading decisions on equities. So if I just show you that, let's have a look at. I wish this was interactive so someone could say, hey, why don't you do this? Let's do Nvidia, and then we're going to click on this button, and it's going to download the reports for Nvidia, the newest ones, and it's going to take that data, it's going to feed it into a data frame. Okay, here's the data. We can see here that all of these numbers are negative. Every single one of them is negative. There's not one single positive one. What does that mean? Well, that means that people are only selling Nvidia. And you can see here we sold. This is January, February, March. This is the end of March. Sold for 10 million, 6 million, 4 million, 5 million, 10 million, 10 million. So it's a lot. And if we kind of aggregate those by day, you can see here this is most recent, and we sold for, this is 9 million. No, that's 95 million. 95 million. This is June 5th, so that's 5 days ago. So you think like, gosh, I mean, who's selling? You know, that's a lot of cash. That's a lot of shares being sold. So now I've made another one, and I can click on this button, and this is when it gets super interesting. Again, the algo has been the data set is all of this data that I have fed into the algo, crunching it, understanding it, and so now it's able to draw these conclusions of this data frame, and we'll see that in just 1 second here. This is pretty smoking. Well, at least I think so. And then patterns and trends. Overall bias towards selling. There are no transactions showing positive values indicating purchases. All transactions are sales. Frequent participants. Certain individuals are more active than others, notably Mark Stevens and Dawn Hudson and Deborah Shoquist appear multiple times. So these guys are really selling. And then this is kind of cool here. Insider roles. Repeated sellers from the data. We likely infer key people with substantial shareholdings, possibly executive or major investors. Okay, so Mark Stevens, high frequency and high value sales. So Mark Stevens is selling a lot of his stock, as is Dawn Hudson and Deborah Shoquist. And if we look here, you can see here ownership reductions. Here's the trend in the remaining shares. So Mark Stevens with 1,074,833 shares in March and ends with 1,003,512 by the 5th of June. So you can see how these people are selling a lot of their stocks, and these people are pretty important individuals as far as I remember. These are like this is leadership team. And so here you can see a little bit about the data in the data frame after it's been analyzed, what the algo thinks is going on, and it's super interesting because you can go in and you look at the information. You can download it. You can click on this button, and then you can get tremendous insight into what's actually going on with this particular stock. So, but if you guys have anything you want me to look at, let me know, and I will be super happy to dig it out and do this once more. Okay, so back to the charts. Yes, so let's have a look at the pound. One last one. Pound. The algo thought it'd be a great idea to buy there. Let's see why. Yes, price and efficiency at the buy zone. So I think, that looks like a pretty decent area. We have a huge stop to keep us safe. So let's have a look at some COT data for that. So funds. We go, actually before we do anything, let's see what's the top, what's being sold and bought the most. Gasoline is being bought a lot. That's interesting. Canadian dollar, 10-year notes, 2-year notes, the E-minis, the S&P 500, and then we have the 5-year notes are getting sold the most. The yen, dollar yen, and physical oils. This is the one we spoke about just a second ago. This is really interesting stuff. So let's just have a quick look at the pound, the British pound. Excuse me, pound. Let's see. Just most recent data for 24. Let's see what's going on. You can see this was negative, and now it's picking up. It's getting less negative. Okay, so the non-commercials, these guys are expanding their long positions quite a lot. Let's have a look. We went from 93,000 to 102,000. Okay, that's relatively big. So we went from 58% long to 63% long. That's interesting. Let's see what the smart assistant has to say. Here, let me grab the pound quick. Pound, about what it has to say about the trends in the underlying tendencies. Yes, it takes a moment. So what it's doing again now, it's taking that data frame that is filled with all of the commitment of traders data, which is a very big database, and it runs through it. Okay, so here we can see current number of long positions, 102,000. Current number of short positions is 58,000. And if we have a look at future predictions, speculative long positions are likely to continue increasing if the positive sentiment persists. Okay, unusual buying or selling. A significant increase of 9,000 non-commercial long positions and a decrease of 8,700 short positions indicate strong bullish bias for the speculators. Okay, the market sentiment, a sharp increase in speculative long positions point to a bullish sentiment for the British pound. Okay, so this could be interesting for us when looking at the pound chart. And if you look at the pound chart, we just dropped down really aggressively and we bought. But according to the COT data, I mean, we have a long bias. And if you look at this, I mean, it looks like we do have a long bias. We have demand below price. And we kind of revisited these areas here, these kind of micro buy zones, and then prices are wriggling higher. So this could be super interesting, but we will have to wait and see. Okay, good. Well, I'm going to leave it at that, kind of all over the place today. But if you have any questions, let me know. Thanks so much for watching.